What's up guys, Omar here, broker and CEO of Alden Mortgage and OMA Realty. So we're gonna do another mortgage rate update as of 7/28/2022. Now what happened yesterday at 7/27/2022, the Feds announced that we are gonna go ahead and kick up the Fed rate interest another 75 basis points. But the weird thing is why did interest rates go down all across the board? Why did interest rates go down? Well, I'm gonna go ahead and explain to you exactly what the Fed fund rate means, why it goes down, and what happened to the market beforehand. And we're gonna explain something super interesting. It's super boring. It's called bonds, and bonds is just debt. But I'm gonna go ahead and explain how all these correlate together and why the mortgage rates have went down from yesterday, even though that they increased interest rates. The Feds increased interest rates by 75 basis points. If you don't know what basis points are, like you just take the 75, okay? So if we say 75 basis points, just take the decimal point, pop it two little spots over, and then that will just be as a percentage rate. So that'll be 0.75% interest rate, okay? Right now we're holding off at about 2.5% interest rate. Now my projections were not really projections. I actually knew where the interest rates were gonna go. Little secret trick of the trade. This is why I get paid the big bucks. This is why I know what I know, and this is why you go ahead and anticipate everything that's moving forward. But let's get on with the mortgage rate update. Oh, wait a minute. Interest rates are gonna go into the sixes, just an FYI. But let's go ahead and get this mortgage rate update. So we are sitting at 7/28/2022. As of right now, a 30-year fixed rate mortgage will be sitting at 4.36%. 15-year fixed will be sitting at 3.50%. 30-year jumbo will be sitting at 4.75%. DSCR, which is a debt service cover ratio loan. This is a loan product that is just mainly for people who want to get on the investment sides that do not have W-2s or they don't have any tax returns to go ahead and show that, hey, I need this to qualify me for a mortgage product. They want to use the income that is coming in from that property, and then they want to go ahead and use that to go ahead and cover the debt. That's what the servicing is. The servicing is the rental income that's coming in. The debt is your principal, interest, taxes, and insurance. And then the covered ratio, does it cover the ratio that we're looking for? The ratio, typically you want to see 1.25 and above. For instance, if you had a $1,000 mortgage, principal, interest, taxes, and insurance, and then $1,000 coming in as a rental income, the servicing, well, now you have a 1-to-1 ratio, if that makes sense to you. If it doesn't, please comment below and I'll go ahead and explain it a little bit more, or I made another video, I'll put a link somewhere around here. That is sitting at 7.75%. Bank statement loans, that's another one of those products where we don't need your W-2s and we don't need your tax returns or anything like that. We just look at the total income coming in on your bank statements versus the total that's leaving, and then we do run a ratio based off of that. We see what your total income liabilities are, income and liabilities. Typically we look for a 50% ratio on that. That is going to be sitting at 7.12%. FHA 30-year will be sitting at 3.75%. 7/6 adjustable rate mortgage will be sitting at 4.35%. USDA 30-year fixed, which is one of those zero down payment programs, will be sitting at 3.77%. VA for veterans, this is a loan program only for veterans, that is going to be sitting at 3.90%. Hard money fix and flip will be sitting at 8.85%. So when the Feds go ahead and announce that the interest rate is going to take a hike, and before I go into that, here's a shameless plug for up to 50% commission rebate, 0% listing on selling your current home or any mortgage assistance. Link in the description below. Let me go ahead and help you out, which I'll go ahead and I'll put my rates up against any big banks. Save yourself a bunch of money, save everybody a bunch of money. I'll go ahead and flash some of the mortgage rates as of today from my leading competitors, my big bank retailers, the JP Morgan Chases, the Wells Fargo. They're all great companies, but let's just face it, money is money and rates is rates. My rates just completely crap on all of them. But when the Feds announce that they want to go ahead and raise interest rates, okay, so right now it's at about 2.5%. What that just pretty much means is this is the amount of money or interest that they are going to go ahead and charge a depository institution, which majority of us, we go ahead and sell and buy from the central bank, right? So for instance, if you want to go ahead and buy or sell from a central bank, that means that they're going to go ahead and charge you 2.5% VIG on that amount of that you're going to go ahead and do, which then when you go into the other side of thing, when you go into these depository institutions, these other ones that are purchasing these, whether, you know, regardless of wherever you're getting it from, Bank of America, JP Morgan Chase, Wells Fargo, myself, anybody that's included, then you have operating fees that are associated with it. So you're like, hey, why doesn't it just go ahead and be at 2.5% across the board if that's what Fed's interest? Well, because then there's operating costs. How do you think they have all these big skyscraper buildings everywhere you go, all these big banks? That's how they do it. So that is just called the overnight fund rate, right? So that is going to be how much banks are actually going to go ahead and charge one another to go ahead and borrow the amount of money, which is also known as the overnight rate, that sets to target the monetary policies. Now, the direct effect of all of this is, yes, the total housing inventory has increased all across the board, which the West, where I'm from, has taken the biggest hit. We've actually increased as of June last month. The numbers of this month haven't come out yet, but as last month, it was 29.83%. Overall, across the board, it's at 19.25%. But it seems like we're taking the biggest hit, and rightfully so, because we are the most expensive market right now. California is by far the most expensive real estate as an encompassing whole across the board. Nobody's more than us. So we are naturally going to be taking a hit. Now, as we get into now we're in July right now, July 28th of 2022. August, September are the last 2 months we really have where we're going to go ahead and see, you know, any type of real traction when it comes to real estate. Now, I've been doing this for 20 years. The slow months do start into October, November, December, January. Surprisingly enough, not so surprisingly, is that the interest rates are going, the Fed rate increase is going to happen again. They're going to have possibly maybe 2, maybe 3 more, who knows, but it's not going to be maybe as big, because they're trying to do this whole thing where they're like, you know what, we totally screwed up. Now, Jerome Powell, he's the chairman. It has nothing to do with anybody else. He was the driving force in his committee on exactly what was happening, and they are bent to have this non-biased whole entire outlook on the economic, financial institutions, the economy as a whole, macro and microeconomics as a whole, right? As an encompassing whole. So they went ahead and they stimulated so much into the economy by giving people a lot of free money with these PPP loans and these unemployment and everything like that. Now they're in a position where they got to retract that, because when they do something like that, when the government gives so much money into the economy, what happens is the dollar is deemed worthless. So now what they have to do is they have to increase the interest rate. When they increase the interest rate, that means that they want people to slow down with buying so much. They don't want people to go ahead and start spending money here. They don't want spending money over there. They want everything to slow down, because they want to go ahead and keep the value of the dollar as high as they possibly can. Well, that is going to be your mortgage rate update. If you like the content, please like, subscribe, comment for any mortgaging assistance, especially the ones that I went ahead and talked about. Link in the description below for up to 50% commission rebate. That's thousands and thousands of dollars in your pocket. Nobody else does that. I don't know anybody else does that. And for 0% listing on selling your current home in the state of California, link in the description below. Until next video, guys, I really appreciate you watching. Peace.